Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Friday, the 24th of October. Starting off with the S&P as usual, and here you can see we're in that we've been in this rising trend channel for months. For the channel around the 50-day moving average area, 65.88 and above that, looking for as high as the 7,000 zone by the end of next month. It's a punchy call, but the chart is quite punchy as well. We've had 2/3 RSI rebounds at and above the neutral 50 level, and of course we had the bounces towards the 50-day line, but not actually touching it, which tends to be a show of strength for a stock or a market. This stage, the worst on the downside would be around the 65.50 area, which is basically post mid-September support. And we're just looking really for fresh attempts at breaking through 67.80 and the record high zone for this market. Moving along to the Nasdaq 100, and here, if anything, we've had a slightly stronger picture, although it's very difficult to just sort of the very, very close markets in terms of the technicals. Rising trend channel support above the rising 50-day line, looking for 26,000 initially, which is the top of that April rising trend channel. Best case by the end of next month, 26,500. You can see the RSI 50 plus rebounds that we've had, so we feel, and it looks as though we are ready to push a little bit higher. There is a rug pull, the 24,000 zone hopefully will cover any dips for this market. Maybe on to the stocks, and starting off with a stock which we have looked at before, and the rug was well and truly pulled after some upside for American Rebel. Here you can see, or I hope you can see that we had the rug pulled after the quite a long time spent getting through the 50-day line, and then obviously the gap down. And what's interesting at the moment is the way that we've had lower lows for October, but a higher RSI trace, and that gives the impression of bullish divergence, and that suggests that the dip that we're seeing at the moment is potentially a dip to buy into. Looking for, I suppose, at least a pushback towards recent resistance on the way down around the $6.80 to 90 zone. Ideally, we stay above yesterday's or the day before yesterday's resistance around $2.30, whatever happens. That bullish divergence hopefully kicking in well. The next on the list is above food, and here you can see that we're finding support above old resistance, or at around old resistance around the $4 mark. Above $4, looking for up to $6.50 by the end of next month, which is basically this month's high as well. But maybe we'll manage a bit more than that on that occasion. RSI 50 plus rebound, and that gives the current situation at above food ingredients a healthy look. Moving on to Better Home, and here not too dissimilar. This chart looks like a mid-move consolidation. We've managed to break back above old resistance on the way down around $75, and looking for a target as high as $115 by the end of next month. Again, backed by the way we've had multiple RSI 50 plus rebounds in the oscillator window, and that tends to be leading indicator on the upside. Over and above the way that obviously support has been found well above the 50-day line, currently around the $40 area. A stock which is new to us is coming up next, and here you can see Hong Kong Pharma. The recent inclusion days looks as though we've broken that line of resistance there from June. We've also broken above the 50-day, rather the 200-day line there around 143, and obviously the 50-day line as well. But at least while we're above or on the right side of the $1.50 area, looking for a retest at the best levels at $2.50 by the end of next month. Another new name coming up, and it is infrared cameras. And here you can see that we've got clear breakout. In fact, basically heading back or testing the old March resistance around $1.34. Next area up is towards the 180, 190 area from back at the beginning of the year, and that's what we're looking for. The longer we remain above the 200-day moving average. Ideally, we stay on the right side of the 120 zone, at least on an end-of-day close basis. Going on to Neumora, and here rising trend channel base. Hopefully this will be the start of an ongoing move, and you can see here we've got the rising trend channel base at the 50-day line, which is around $1.70, and above that, looking for up to $3.50 by the end of next month. Ideally, now we stay on the right side of the $2 area, which has been recent broken resistance. The next on the list is Reviva, and here you can see we've got a rising trend channel base as well. Bear trap rebound from below a rising 50-day line there at 48 cents, and above that, looking for the 200-day line up to 90 cents by the end of next month. So let's see if that situation can deliver. Rackspace is next, and here another rising trend channel base breaking the 200-day line there at around the $1.63 level. Above that, we're looking for 220 by the end of the next month, which is also the old support area from basically the end of last year. Just on to the last couple now. The first one is being delivered right now, and it's reAlpha. Here you can see that we got not quite a rising trend channel base, but what's interesting here is a rebound yesterday just above the rising 50-day line. That's around 64 cents, and above that, we're not only looking for recent resistance around $1.30, but actually as high as $1.80 by the end of next month. I suppose if you're fussy, you'd want to stay at this market to stay above the 200-day line at 83 cents. Finishing off with 374, and here it's an extended rising trend channel base, and it's also a rebound off the or above the 50-day moving average there. That's around 35 cents. Above that, we're looking for obviously a retest of the best levels of the recent past, which is obviously towards $1.10. And ideally, we manage to at least hit resistance on the way down at 60 cents as an initial target in coming days. RSI just crossed above the neutral 50 level as well, which is a plus. And obviously, we'd like to see this stock remain above the 50-day line, whatever happens. That's it from me today. More updates over the weekend.